Hello traders and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the Ichimoku Cloud trading strategy, which is a powerful Japanese system that can transform how you identify trends and execute high probability trades. This comprehensive indicator combines multiple elements to show you support and resistance levels, trend direction, and momentum all in a single chart. So if you've been struggling or frequently finding yourself on the wrong side of market moves, this strategy could be exactly what you need. Stay tuned until the end to learn not just how to read Ichimoku Cloud, but how to implement a complete trading system that can help you capture major market moves with precise entries and exits. This is one technical approach that deserves a place in every serious trader's toolkit. So without wasting any much of your time, let's get started. So the first step is to add my Ichimoku Cloud to our chart, and we are on the 4-hour time frame on Euro USD, which will be our case study for today. So the Ichimoku Cloud, like I explained, is a comprehensive technical analysis system developed by Japanese journalist Goichi Hosoda. The name translates to one look equilibrium chart, reflecting its purpose of providing multiple market insights at a single glance. When looking at this chart, you can tell what exactly is going on, whether we are bullish, whether we are bearish, whether we should buy or whether we should sell. So I'll explain how you can just look at the chart with the Ichimoku Cloud and tell exactly what's going on in the market. All of this you can tell it by understanding of the components. The indicator has 5 components. It consists of 5 components that work together to provide a complete market analysis. We're talking about the first one is conversion line, which is the blue line. Now this conversion line is calculated by averaging the highest high and lowest low of over the highest high and lowest low over 9 periods. It functions as a short-term moving average that shows immediate market momentum. Then next we have the baseline, which is the brown line you can see, and this one is similar to the conversion line, but it's calculated over 26 periods, making it a medium-term indicator. When price crosses this line, it often signals potential market changes. And also we have the span A, leading span A, and we have leading span B. Now these two lines form the cloud. The cloud is the Kumo. It's called Kumo in Japanese. Now the span A is the average of the conversion line and baseline projected 26 periods forward, while the span B is the average of the is actually the average of the highest high and lowest low over 52 periods, also projected 26 periods forward. It forms the other edge of the cloud. And then the final component is the lagging span. Now the lagging span is the current closing price plotted 26 periods back on the chart. It helps gauge market sentiment by comparing current price to historical levels. Now this is all you should know about the Ichimoku Cloud and its components. Now these components, the way they work, for the conversion line and the baseline, crossovers between these two lines signals potential trend change from bullish to bearish, from bearish to bullish. We have a crossover here where the conversion line crosses above the baseline, signaling a bullish trend, and we also have one here signaling a bearish trend starting or a pullback. And also the cloud, the span A and span B forms the cloud, and when price is above the cloud, it means that we are in a bullish trend. Also, when the lagging span crosses above price, it means that we should be anticipating higher prices on the chart. Now this is how you can look at the Ichimoku Cloud on the chart and exactly tell what's going on in the market. So how can we trade with the Ichimoku trend trading strategy, which is the topic of our video today? Now the first step is to confirm the trend direction. This is the very first step of any trading strategy. Confirm the trend direction. So you begin by identifying the prevailing market trend using the Ichimoku Cloud. A bullish trend is confirmed when price is trading above the cloud, and a bearish trend is evident when price trades below the cloud. So you have price being above the cloud right here, going above it, breaking above the cloud, signaling a bullish trend is about to start, and you have price breaking below the cloud right here, signaling that a bearish trend is about to start. You can see the same thing happening here. See the same thing happening here. Price breaking below the cloud, signaling a change in trend direction from bullish to bearish. Now, once you've confirmed the trend direction, the next step is to wait for the conversion line and baseline crossover. Now, once the trend is established, as you can see, the next step is to wait for the crossover if it hasn't happened already yet. Now, for bullish trend, conversion line crosses above the baseline. Remember, conversion line is the blue line, baseline is the brown line. Now for bearish trends like we have here, the the conversion line crosses below the baseline. The conversion line is the blue line and it crosses below the baseline, signaling potential bearish turnaround in the market. You have that crossover happening right in the middle of price breaking below this cloud, somewhere around here. Now after spotting these two confirmations, remember, you should spot it in our other examples where we can spot this crossover. We have the crossover happening right here. So always wait for the crossovers to happen, as it is very important in price that this crossover has happened. We have the crossover happening even before price broke below the cloud. We have that happening here. And we have many other examples. Here price was just ranging from up to down. Actually, we have price breaking above the cloud right here and also giving us a crossover there. This was when price was changing from bearish, this long bearish trend, to bullish trend. So we're talking about trend trading. Remember, Ichimoku trend trading strategy. So after waiting for this crossovers, the next step is to check the lagging span direction and position. For additional confirmation, verify the position of the lagging span. Remember, the lagging span is this green line here. So if the lagging span is above price from 26 periods ago in bullish trends and below price in bearish trends, it confirms that market sentiment aligns with the current trend direction. We have this lagging span moving above price here, even as price was moving above here, and this just shows us that we should be looking to buy. This is just for additional confirmation. Once you see these major confirmations, which is price breaking above the cloud and the crossover happening, you can proceed to look for your trade opportunities. But for additional confirmation, you can use the lagging span also. Then after this, the next step is to look for an entry opportunity. Now, normally I'd like to wait for a pullback and a break of market structure before I enter my trades. And looking at this, where can we see that happening? After we have our confirmations, now the trend is identified. We've identified the trend and the crossover has given us the confirmation that the trend is a valid one. You should wait for a pullback like this. Price kept on going down, then we had this minor pullback, then the continuation break of market structure to the downside. Now at this break of market structure, that is where I'll place my entry. I'll just be waiting for this market structure shift right here. So just place my sells from here and stop loss above that, and my take profits all the way down to ride the trend. And you can also remember to set your trailing stop loss, which helps you lock in gains as the trend moves in your favor. So that is exactly how I would have been able to join this trend. And the next, let's look for the next example. Remember, after spotting all of this, I should wait for a pullback. You can see the pullback happening here, and then market structure shift here. Just looking to place our sell trade from here, stop loss above this high. Take profits can go all the way down to ride the bearish trend. With our trailing stop loss active, of course, you can use these moving averages, this conversion line and baselines for your trailing stop loss. We also have another confirmation here. Look for where we can place our market structure shift happening there. Sell immediately price breaks that area. Stop loss above the high or above the cloud. I prefer above the high, and take profits all the way down to ride the bearish trend. And this lasted for days. Remember, this is trend trading strategy, so we are following the trends. Some trends can last for as long as days, weeks, even months. Like we have this bullish trend that lasted the whole of March in Euro USD. Although we had a correction towards the end of March, and You can see the way if I wanted to ride this bullish trend all the way up, of course I have my confirmation. On the lower time frames, we have this as a pullback. So just looking at this as a market structure shift to the upside, I'll just place my buys from here, stop loss below the cloud or stop loss below this low, and ride this trend all the way for weeks and for days, locking in my gains with my trailing stop loss, of course, and positioning myself also for other trading opportunities. This is a 1:9 risk to reward ratio. Imagine if you followed this all the way up using the Ichimoku trend trading strategy. So that would have been wonderful. So I advise you to practice this strategy and give us comments under this video. Share it to your friends, like and subscribe so that you won't miss out on trading strategies like this one. Alright traders, we've come to the end of today's video. If you gained any insights, please like, subscribe and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching and I'll see you in the next video.